Welcome back to the Closing Bell. Jason Jacoby, Mark Boyer, aka Coach Boyer, aka tight end 8480, Colts, Jets. You know who it is. We're back with you. Coach B, what's going on?
What's happening, brother? You doing good today? I'm doing great. Well, you forgot pepper, salt and pepper. You forgot salt in your pepper. You forgot that part.
I did. But
It's
we
all
have
right.
a lot of nicknames these days, so
Yeah, we just make them up every week. It's great. All right, how you
but
doing? Good week? Good week in the markets? What are we going to talk about today?
yeah, great week in the markets. We hit some new highs, but before we get into that, and you share kind of like your John Gruden-esque like playbook strategy, sitting in the QB room, going over charts and so forth. We're going to talk
Yeah.
about a few updates to the IRS tables and some tax planning
Yeah.
rules at a glance. Okay, so let's get into it here on the
Yeah,
screen. Or if you're listening, oh, go ahead.
let's roll this out right away. It's good to hear. We need to talk about this early in the year, so this is good stuff. All right.
So overall, just with inflation, obviously the tax numbers have shifted a little bit. The tax rates haven't shifted, but the brackets in terms of the amounts you can make in each specific bracket have gone up. So you could potentially be paying less tax, again, potentially. But let's talk about first education. So 529s, you can still gift 18,000 per year before gift taxes. Per couple, 36,000 per year. You can do an accelerated 5-year gift at once for 90,000 or 180,000 per couple. Won't talk too much about learning credits, student loan deduction limits, 2,500 still. We got phase outs for American Opportunity Credit, college savings credits. So what we really should focus on here is retirement. You know, a lot of people here that are listening, we're all going towards the goal of retirement, some closer than others.
Easy. What does that mean? Some closer than others.
I was going to see if you picked up on that,
I
but
did. Yeah. All right.
so IRA
That's a roundabout way to say somebody's old. You know what I'm saying? But that's cool.
you're not old.
It was tech. It had some
You're
tech.
not.
I like it. All right. Anyway, yeah, some of us are closer to that than others, but this is super important, right?
Yeah.
The retirement side. So, how much if I'm over 50? How much can I put into an IRA this year?
So you can now put in $8,000 this year. It's gone up slightly from last year.
Okay.
You got that catch up, $1,000 catch up. If you're under age 50, then you're looking at $7,000 for this year. Obviously, you got to be careful for phasing out, Roth contribution eligibility. Got to be looking at that. So it depends on your income tax bracket. Talk to us. Talk to your tax advisors. We can help you decipher if you can contribute to Roth IRAs. And then also there's a phase out for deducting IRAs. If you're working but your spouse isn't, then potentially you can still get the tax deductibility for that spouse depending on income. So also 401ks, that's also a big thing. We're all saving towards that retirement goal. 401k is a great way to do that. 401k, 403b, 450, 30,500, 30,500 with a max employee and employer contribution limit of $69,000. So that's all I wanted to touch on. I just wanted to briefly touch on some new updates. Obviously, with Secure Act 2.0, which Coach B here, if you have any input on Secure Act 2.0, there's some updates to that, which are important. So, the ways that you can maybe take out $1,000 for an emergency situation from an IRA, or even though we advise against that, there are some certain, benefits that Secure Act 2.0 had instituted in order to potentially help Americans if needed.
Yeah, that's good. That's good. Jay, I had some questions this week about, just 401ks. Hey, Mark, I got a 401k at work and, I put in 3% and they match up to 5 and, but, I can't really do that. Makes it a little tight. Just all those reasons. All I could say is if you have a 401k available to you or a 403b, if you're a teacher or a nonprofit organization, I can't encourage you enough to, especially if there's matching. Okay, if there's matching involved, minimum, you want to at least put as much in as you can get a match for. Okay, so that's really important because that's free money that is available to you that you need to take advantage of that. So figure it out, make it work, cut some spending if you need to, but put that, especially if you're young and you have a long time to compound your interest,
Yep.
longer. Again, take advantage of the eighth wonder of the world, compound interest. It's like, hey, over time, the younger you are, the more that compounds over time, and you'll be very happy when you get to be my age. That you started young and you were after it. So definitely get up to the match and do what you can there, taking advantage of retirement. So good that we started with this today as we start 2024. Always important for us as investors to be looking at our options for what we can do in retirement. And the other thing is Roth contributions versus traditional IRA contributions in 401ks. The
Yep.
younger you are, would again highly recommend, if you don't need the tax write off, and most of the time you don't,
Yeah.
then make your contribution a Roth side, right? I mean, you
Yep.
want to probably put it in on the Roth end of that, so that that'll grow tax free long term.
Yep.
Roth IRAs are
Ding,
phenomenal.
ding, ding, ding.
Yeah, that's like the bell. That is the bell going off for the future. So yeah, that's a beautiful thing and available to you. So take
Some
advantage.
great, yep, some
Good
great
stuff.
points you brought up there, Mark. But let's dive into some big things this week. Smack dab in the middle of earnings season, we had over 1/3 of the S&P 500 report in earnings this week. But why don't you give us a little overview, maybe some stocks that we're watching, or ideas, or something that we can kind of not hold on to, but ponder for thought this weekend, kind of heading into the next trading week next week. We had the S&P notch another record high. We had the Dow Jones breach 38,000 for the first time. So kind of in uncharted waters here, but also we've been to highs before. And going into election years, we're obviously expecting volatility. So
Yeah.
why don't you talk us through here some
Well,
plays?
yeah, well, let's look where the markets are. The S&P 500. I got on the chart right here. This is a monthly chart of the S&P 500 going back to the early 90s. You can see, markets and how the S&P is. This is early 2000s. This is '08 in here, '07, '08, where we had some big drops. As you move up, you're going to see that you always get some pullbacks. This is 20. This is COVID right here. And then back here in late 2021 when the markets hit a high, and then 22 happened, and we had a significant increase in interest rates, and the markets responded there. And now especially here since since the last few months here, last couple months, it's been back up, and so you just see that we're hitting these highs. Actually, today closed at 48.90, which is above this high here. So actually, that's a really positive sign in the sense that it's breaking some. When you get this level here, of old highs, and you start to break them, and you can stay above them, that's a positive thing, technically, in the market. So you're seeing that in the S&P 500. Pull up the Dow here again. Just looking at a monthly chart, you can see the same idea. The Dow here is now actually the Dow's stronger and has been stronger even than the S&P, in the sense of it broke that's kind of the 37,000 mark. We're now at 38,000. The last couple months here, we've broken through. If I go to a weekly chart, you can see it a little clearer on the Dow. This last week, we broke through that. So we're in a strong market here with the Dow, which is the Dow again is an index of 30 kind of
Mhm.
very large multinational companies overall. So looking very strong. Interesting, the Nasdaq, even though we've had this huge move in the Magnificent Seven, we talk about it a lot. The tech. The Nasdaq still has not, though, gotten to its most recent high that was in 2021, end of 2021. So that's still got a little ways to go there, but you can see that the trend on this weekly chart has been to the upside. So volume's been up. We're sort of in this at the moment. We're sort of in a Goldilocks period. It looks like, because
Yeah,
you got this look that we're going to get a quote soft landing, that maybe we don't get the recession. You and I have talked a lot about this in the past. Maybe we've already had the recession in this sense of rolling recessions. But ever since that December report, the Fed has started to talk about cutting rates, and the market's kind of gone. It's gone. It's a lot of money on the sidelines. We talked about all the cash. You can see it starting to roll
trillions.
in here. So it's very interesting. What I like about the market at the moment is that, and we've mentioned this before, but we've had the Magnificent Seven going on. Those are now, Tesla. Maybe they're talking about Tesla not being a part of that maybe right now because of their drop.
Yeah.
But it's interesting to see what's up. But that actually the participation is actually broadened out, and so that's a good thing. So we talked about we see our expectations this next year is high single digit returns in the S&P. I think it won't be without some volatility, but that's kind of what we're looking at. And thus far, I mean, looks like it that looks positive. So it could happen. We just nobody never knows. Everybody's taking a guess. I heard a guy today say, a very respectful economist thinks it's S&P will go to 5,400, which is another 10% higher from here overnight. So yeah, right in line with what we've talked about when our year end, when we did our annual review, right? Yeah, for our outlook for 2024. And so anyway, yeah, it's good. It's good. And but again, stay cool, calm, and collected. There's when the markets are running, you can get euphoria, which is usually market tops. I would love the market to go sideways here for a little bit and consolidate. That would be fantastic because it would be healthier long term. And we're also keeping an eye on that bond market. Remember the 10 years, interest rates have come down. It's flirting right in that 4.2%. We're watching that closely. Still like bonds for this year. So great time just to reevaluate your portfolio and make adjustments for the future. Good. We'll see. Election year too, right? We've talked about that.
Election year. Yep.
Be an
Always
issue.
volatile. Yeah,
So.
absolutely. But year to date, like just to kind of give our listeners and viewers here kind of a synopsis of where we're at. I mean, Dow's up over 1%, S&P's up over 2.5%, Nasdaq's flirting with 3%. So only lagging indicator here for not lagging indicator, but lagging index would be the Russell 2000, your small caps, which is down almost 2.5% for the year, which still bullish on small caps. When you're coming out of an economic slowdown or where rate downdraft environment, so rates start getting cut. Obviously, those small companies are the ones that borrow the most money to raise the most capital, and they got to do that by going private lending or to banks, whether it's regional or big banks, national, international banking. But those still look favorable as you're coming out of kind of a higher interest rate environment. Those companies, those indexes, while you have to be selective of what you buy, because I believe it's upwards of 60% of the Russell 2000 is not profitable in terms of revenue. So
the index again, is right. Yeah, that's an index.
Yep. So a lot of those companies, a majority of those companies are not profitable yet, right? So they're more volatile. Yeah. Especially in a Goldilocks scenario where things seem good, but could turn south rather quickly, as we've seen in the past.
Well, you got to watch that. You got to watch the small caps because that's kind of the bread and butter, right? That's the mom and pops and people. Yep. I mean, that's a really important place to watch those and the industrials. There's certain parts of the market you got to watch closely. We've had a nice move this week up in the small cap, so that again gives us more confidence in this market to see the small caps participate. Because if they're not participating, or if the industrial, some of the big brick and mortar, organizations or companies aren't participating, then it's not necessarily a great sign. So, So anyway, for this week, again, this is a closing bell for a week. It looks fairly positive, but again, I'd like to see it kind of. I know it sounds crazy. You want to see it go up all the time, up, but you need to have you need to stop. Kind of like when you're hiking up a hill, sometimes you just got to stop and take a breath. Get a breath, and then it gives you more power for the next move up. So
next leg,
kind of where we're at. It'd be good to sit down and have some lunch here in a way in the markets. It's just kind of go sideways, even slightly down, to get some weak holders out, and maybe that helps us get to the next level this year. We'll see.
And speaking of earnings season, Mark, if you wouldn't mind sharing your screen, can you pull up Tesla for us here? Just want to talk about them as a scenario. This is why we diversify. This is why we don't hold specific individual securities above a specific threshold because of movement like this. But also, just want to touch on before we kind of look at Mark's chart here. You know, want to look at a lot of the big tech names. You know, they've actually had fantastic weeks, fantastic years, 52 weeks. You know, you've had besides Tesla, you've had Apple. You know, which they're facing their own challenges with softening sales of their hardware, right? I mean, iPhone sales have slowed down. So they're trying to kind of reposition themselves and how to kind of generate more revenue and earnings per share growth that investors want to see and that they're paying for in this stock price. So besides Apple, we had Microsoft, Amazon, Meta, all came in above expectations, top line, bottom line projections, beat estimates, which is great. There were specific sectors. Google had their cloud revenue missed revenue guidance, but things like that where they're kind of trying to grow and innovate in those specific areas. It might take a little bit of time for the train to technically leave the station. So to use layman's terms here, but yeah, most of the tech, most of those big names, Microsoft smashing expectations. It's Tesla that they've kind of missed on the top and bottom line numbers here, as you could see that kind of space, that big downdraft there. So
Yeah,
is
down
that
down
concerning to you? Is that
down
concerning to
12,
you, Mark?
down 12%. A couple of days ago, their earnings were down 40%. So and basically Musk came out and said that it might be a year or two before they're sort of in between the growth cycle in the EV market. Is it concerning? I'm not surprised, honestly. I mean, I think that the EV market, there's always been this argument that there'll be a limit as to those, the amount of, cars that they'll sell in that place, in that kind of in that industry,
Mm-hmm.
because there's only a certain amount of people in our in our world that'll buy EV cars or be interested in them.
Yeah.
There you can argue that all day, but the bottom line is, they're adjusting. This looks like it could be if you're a long term holder, you know, it could go lower. I mean, we broke down in here. It could get to the 150s. I mean, that'll be a key area. But you've got a lot of support over here. Yeah, I don't know. It's going to be interesting. I think if you're long term and you're excited about that industry, this could be a place to nibble and buy. But I might wait till it consolidates and see if it goes lower. It's kind of like catching a falling knife at the moment. But
Mm-hmm.
again, if you want to nibble in and take some spots, could be a long term could be a long term buy. If you look at a weekly chart, it's not like we haven't been here before, right? So Tesla's just moved. We had a bad week. This shows the week performance, the weekly performance here. That this big bar. Go back to monthly. It doesn't look near as ugly. Okay, so
All right.
just this last,
March.
and yeah,
Right.
we were down, right here, early 2023. This thing was at $100, and so that and then it moved back. So anyway, we'll see if it holds. It's got some areas in here that it needs to hold 160, 170, and we'll see. It'll probably go there and test it, but we'll see what happens. But longer term, I think it's you could probably buy it, and it'd be a good investment.
Yeah, and Tesla isn't just a car company, it's a tech company. So they have, diversified operations. And just like you had mentioned, Elon saying that this could just be a not a glitch, but a kind of in between of growth cycles from transitioning from their kind of market domination of EV vehicles. I mean, you look everywhere, Teslas are everywhere on the road. It just drives me nuts sometimes because it's like, there's another Tesla, there's another
Yeah,
Tesla. It's so
yeah,
mainstream these days, right?
yeah.
Uh,
Especially here in
that
SoCal. Yeah,
Yeah, right. Exactly. So basically, you have such a market dominant performance per se, using football terms, you have a dominant performance in this space that sales are going to inevitably slow at some point because you've kind of the demand is going to start to taper off because everyone that wanted a Tesla is either has one or has ordered one already, and so those numbers will come down. So how do you repivot and refocus on AI or solar or Starlink or whatever, space, whatever your next kind of growth phase is and where you see the most revenue potential and growth potential, that's going to be kind of interesting to see what Tesla does to reposition there. I know Elon was talking about AI and he wants to do more in that space, but wants more of a say.
Robotics too, right? Yeah.
Yeah, in Tesla's decision making, because obviously he's got a board now that he has to report to, so he doesn't get to make all the AI decisions. He just wants more of a say of what happens, because obviously he doesn't want AI taking over and kind of creating a mind of its own and causing trouble like some of those Terminator movies, iRobot or something like that. We don't want one of those on our hands. So yeah, so it'll be interesting to see. But again, that's why we diversify. That's why we look for hedges on whether it's fixed income, alternatives, other kind of stocks, or opportunities out there. This is just one of those opportunities that might be a time to buy, like you said, and nibble at as this thing, if it continues to go down.
Yeah, possibly, but there might be other options right now until that
Yep.
thing until that stock actually finds a bottom. If we, it'll give us signs of that. So, yeah, it's case by case, and just for the record, we're
Yeah.
not huge holders and have not been huge holders of Tesla here. We do own them in that stock and various actively managed accounts that we've had too. So I trust that leadership too, and their research to determine, if this is a buyer or sell in some of those ETFs where we might hold some Tesla or whatever. So anyway, yeah, it's the reality of the stock market. Something that's things go up, things go down. You just want long term. You want to win more than you lose. So diversifications and research is really important. So just make sure you know what you're doing if you want to individually buy Tesla in here.
So I'm going to make a bold prediction before we move on to economic news to focus on there. Is I think maybe in 10 years, you're going to see a dramatic shift away from EV vehicles, or at least the government overreach of mandating them, because I think you're going to find there are other avenues of achieving, clean energy and clean vehicles, through hydrogen vehicles. So I heard through the grapevine that the U.S. Navy has a ship, which we just talked about, that basically runs on hydrogen. So it takes the hydrogen molecules from the water that it's in and then repurposes it and uses it as fuel for its engine. So basically it never has to refuel on land, which I found remarkable. And I saw a hydrogen vehicle. So when I lived in Telluride, Colorado back in 8th grade, this was 2004, I think it was. We had a hydrogen vehicle pull up and they talked to us about how it worked. And they're like, oh, this is the future. And this was way before even like EV vehicles were big, right? But these people were kind of like a United States tour, like promoting, hey, like hydrogen, like this is the way to go. It's like self-cleaning and, it's easy to use and it can be mass produced and it's found everywhere. Hydrogen's like, I think the most bioavailable molecule element out there. Again, I'm not a scientist. Please don't judge me if I'm butchering all of this. Okay. But basically it's readily available is what I'm trying to say. Yeah. So that's my prediction, is that there's going to be other forms of cars in order to, generate revenue and growth for those specific companies too. So it could be an area to look out for.
Yeah. And that sounds great. It all sounds great, but I'll just say that the reality of where we are in this world and the efficiencies of dealing with disease and water, that was bad. Fossil fuels has helped us come a long way. So I'm good with all these alternatives, and I think it's fantastic to try to figure out how to do things in a cleaner way. That's a fantastic goal. But I guess for me, I just don't want anybody to tell me what I have to do.
Right. Absolutely.
So there's mandates and. With Tesla and what's happening in the EV market right now is a lot of these companies are finding that demand. They got, Ford and a lot of the American automakers have bought, they jumped in full go live into the EV market. And now they're sitting on all these cars. They can't, it begs the question that, like in a state like here in California, where they're telling us that, there'll be no more, you won't be able to buy a fossil, gas guzzling car here, in 2030 or something. Like, it's crazy. I mean, and then, so it's going to be interesting. Right? So we'll have to wait and see the politics of it. I hope we continue to innovate. That's
Yeah,
fantastic. We got really smart people doing it. But then in the economy, the way it should work is that let the public decide what they want and what they don't
free
want.
market.
Yeah, free market. Don't tell me what I have to do because you
Yep,
got some agenda.
absolutely.
So anyway,
Amen to that. Preach, preach.
preach it.
Uh,
All right,
so
moving
let's
on.
talk economic news here. So obviously we had some big economic news that came out this week, which is quite fantastic. We'll kind of talk about Goldilocks scenarios, what it could mean. But GDP, we got our first reading of Q4 GDP, and it came in a lot hotter than expected at 3.3% in the last quarter. Obviously, you're back in the holiday season, consumer spending. The consumer spending on services and goods plays a major portion in generating GDP. So people are still spending money, and that growth exceeded expectations. So, um, thoughts on that? Is there anything specific that
Well,
is
yeah,
concern is concerning? I mean, you got people spending, but we talked about the credit card usage and how
yeah.
delinquencies have gone up.
Yeah, I mean, I think that we said that the fourth quarter was going to be fairly strong. I mean, it came in this number wise stronger than anybody expected. Actually helped the market somewhat. It was interesting to watch the bond market because you would think that if you had higher GDP, that the bond market would have reacted really negatively, and yields would
Yeah.
have really spiked. And it's interesting that they didn't, which tells you that I think the bond market still is believing that longer term we're probably, that it's not going to affect the idea of cutting rates in the future. That's out there. The other thing is that a couple of things. One is I think there's a chart up on this.
Yeah.
The
On the
question I
newsletter.
have on all this is that I got two things that I saw. First is government spending. Okay, so how much of that is government increasing spending, the GDP? I know people are out there spending money. They're in services. They're going on trips. Those areas are still very strong. I think technology, especially for businesses and IT, different things. But the question I have is, you know, even though we knew it was going to be higher, how much of this increase is in, how much is the government spending to make these GDP numbers seem higher? And then also, um, and also, here's the other funny thing: the history's been in the last year or so, in this administration, which again in politics, it's unfortunate we give politics even in the Fed. But the question that you always get this higher number, hey, GDP 3.3%. It's kind of that headline number that everybody jumps on and goes, whoa, we're killing it. We're going forward.
Yep.
And then the next revision or the next time there's talk of this again, it's been consistent recently in recent months and quarters that the revision number comes down later than nobody talks about, right? So
Mm-hmm.
that's an interesting deal. So it's like, how much is the government growing, spending to increase this, so anyway, all that to say, I love
Well,
an increase in GDP, but those are questions that are out there still.
good question. So I have the answer for you, and I'll share it.
Yep.
Yep,
Wow.
I have the
Good.
answer.
Oh,
So
pepper.
I'm going to break down the select components that make up GDP, and we'll talk about the overall change from quarter four of 2022 to quarter four of 2023, our most
All
recent
right.
reading. Okay.
Okay.
So if you look at the average overall GDP of 2023, it was 3.1%. Okay. Decent number. So I'm going to break down the highest amount of change down to the lowest amount of change based off of these select components that we pulled out of the GDP report. Okay. So number one, drum roll, please. I'm just kidding. Don't drum roll. There you go.
Right.
So coming in at number one is what you said, government spending.
Oh, wait, what's the high?
Yep, that's the highest change in GDP kind of percentage, as a component of overall GDP growth. A majority of it was government spending. So our average, again, GDP growth was 3.1. Government came in at over 4.3 ish, 4.4 ish.
Mm,
So
no.
so it's beating the overall average already right there. Coming in second at still over a little bit over 4%, which is non-residential investment. So think like the creation of factories or spending money on like non-residential buildings or infrastructure, whatever it may be. That came
Tools.
at the second highest. And then the third was one of the two parts of consumer spending on goods came in at roughly 3.4, 3.5%. So still above the 3.1 average for overall GDP. Services came in quite a bit lower for the change year over year from 2022 to quarter four 2023. Came in a little bit over 2%. Exports came in a little bit over 2%. Residential investment flat. So home building, homes, things like that. And then imports actually saw a negative change. So, it's actually more like a little less than negative 1%, but still negative in terms of
So
GDP. So
interesting. So services were actually 2%, you said,
yeah, a
year
little
over
over.
year. But I bet you, if we did
Yep.
that quarter by quarter, especially the
Correct.
last few quarters, it's probably been up most in those.
Yeah.
And that's probably going to
Yeah.
increase. That'll probably continue to increase. I mean, the more people, like clients that I talk to, especially in retirement, whatever, it's like, hey, I want to travel. I mean, that's still out
Yeah.
there. People want to go do
Yep.
some things, and so that's probably going to stay high too. So yeah, all right. Well, there you go. Government is in there, and we'll see where the next one comes, the next GDP report, and see how much this one gets revised down, if it does.
And we still think that the economy is probably going to continue to slow down. GDP might not be upwards of 3% for the next few quarters. Projecting 1 to 2% GDP, maybe. Right? We'll see.
Yeah.
But interesting to talk about. But also, so let's talk about the conundrum here, right? Well, let's talk about PCE, personal consumption expenditures. Excuse my English. Fed's preferred inflation gauge, right? The headline inflation numbers came in and remained steady at year-over-year basis, 2.6%. And then when you strip out volatile, energy and food prices, it actually decreased to 2.9%. So we got a spot reading below 3%. So that's all trending in the right direction here. So that begs the question here, Mark. Fed probably not lowering rates, this next meeting here at January 31st.
No.
What about March? What about the March meeting? What are we thinking here?
Well, I think the market thinks if they're going to cut rates, it'll start in March. I think these numbers probably drops the chance of that happening now in March. So it may not. Still think that they're going to drop rates going forward, because there's enough underlying underneath the headline numbers to say that things are slowing down. Again, what we just got with the GDP was, it's a backward looking, it's looking backwards. So,
Yep.
we see, but now going forward here, we talked about this early January, the first quarter will be this quarter is going to be really key to see what's happening. So think the slowdown, if any, will, we either level off or maybe slow down in here, going forward. And the key on the inflation is that, disinflation, remember we talked about that, is the fact that inflation is just dropping. Doesn't mean things are getting lower in price. It's just the rate of inflation is going, not increasing as much.
Slowing down.
It seems to be the case, and that's what's happening here. So the numbers look to be, even though it's a little bit higher, it still is going in the right direction as you look at it kind of in a longer version, which I think you have to do with the inflation. So it's gonna be so. What about March? So March, I would say there's a smaller, there's a 25,
Less likely.
less likely chance probably to have a drop at that point. You got to remember though that Powell is walking this fine line. So the long term view of the Fed is that they usually can't land a soft landing, and right now they're actually looking good. Okay, so the Fed is looking like, wow, they're actually pulling this off, and that they're getting this soft landing. So we'll know here by more numbers in February and then March, but you could get Powell thinking, even if the numbers aren't necessarily where they want it, if they continue to be flat or down, they might try to preempt over tightening too long, and they might cut rates in March. So that's going to be interesting to see, because they might, show, because again, usually they do it too long. He might try to say like, okay, we're not going to screw that up. We're gonna lower it, even though, and anticipating as it continues to go in the right direction. That's
Yeah.
one issue. But again, this inflation numbers. I was reading too today. We didn't bring it up, but this whole thing in the Red Sea with what's happening with shipping right now is
Yeah, that's crazy.
that's a big deal. And so
Big
they're
deal.
actually shipping costs are ramping up tremendously over there
Hmm.
because companies are doing new contracts for the future, saying, "Hey, we can't go through this area anymore because of the
Yeah.
danger. We got to go this long way around, and that's going to cost more." So it's going to be interesting to see what that does, to inflation, even in that supply chain. So I don't know. It's a
Good
really
point.
interesting. There's a lot of moving parts. The other thing that we got to talk about, the other thing, and part of that is just a side note, is you and I had talked about this election year, right? So if they do lower rates, what is the fact is they
90
don't
days.
typically do 90 days prior to an election. So that puts a
Hmm.
little bit, it closes the window potentially for what they want to do. I don't know. I don't know
Got
if
it.
that's
Yep.
accurate, but that's been historic kind of
Yep.
thing to
Historic.
watch.
Yep, historic numbers. They just don't want to be seen as like trying to influence the election, so they usually pause any kind of campaign 3 months prior to election day. So, but I
Yeah.
really like your point on again, it's a very interesting time because again, you got GDP growth, which you look under the hood, a lot of it's government spending. There's no ifs, ands, or buts about it. That's just what it is. But consumers still spending. Retail sales were up, 0.7% for the month of December. Beating the consensus estimate of 0.4% for the month. So you got spending going up, which obviously drives inflation higher. But you got the core PCE and the PCE headline PCE numbers coming down in the right direction. You got GDP going up again, just reverting back to that. It's so you kind of got this like paradigm of okay, that makes it look like which could scare them to like, oh, let's wait and see if spending continues to stay strong, which could refuel inflation in the US we're talking about, but then you look macro at global with what you're talking about supply chain, and it doesn't affect the US as much because we don't get our supplies through the Red Sea as much. You usually use that route for China or Eastern Asia to get through to like the Mediterranean, to get through to the European Union, and Great Britain, the UK. So you start putting pressure on that, not only fuel prices, which affects everything, not only goods, services, whatever it may be, things become a lot more expensive, take longer to get there, which means prices are going to go up, which means inflation could rear its head over there more so than in the US. So I like that was a good point that you brought up. There's a lot bigger picture and story that's kind of developing here on the global scale.
So bottom line is we don't, obviously it's a great question, but we don't really know.
Yeah.
There's a lot of things still to see here in the next few months, but longer term, it definitely looks like regardless of when they do, the Fed has indicated, and this is what the market's banking on, is that
Yeah.
that there will be as much as over the next 12 months or so, at least 100 basis points of cuts by the Fed,
Yeah.
which comes back to again, and that's what. So if there's a surprise to that, that would not be necessarily great for. Um, Stock market or the bond market, especially
Yeah.
because the bond market right now, we're one of them, is that we feel that it's a great place to be right now
Mm-hmm.
in mid duration kind of fixed income, because if they
Yeah.
lower rates like that, we can get some real appreciation. So anyway, yeah, a lot of good things going on. It makes it fun trying to put a game plan together
Yeah.
in this crazy time. Yeah, so good stuff. Good.
Well, that's it for this week. We're always here to arm you with financial food for thought for the next week or so, and you can best bet your bottom dollar to use Annie. Remember Annie? Is it the show Annie? Right? Sun will come out tomorrow. Is that right?
Yeah, I think
She
so.
used to say, "Bet your bottom
Why
dollar" or
don't you
something
sing
like
it?
that.
Why don't you sing it for us?
The sun will come out tomorrow. Bet your
Never
bottom
mind.
dollar
Don't
that
sing. No,
tomorrow
never mind. Don't sing.
there'll be sun.
Okay, I
so,
didn't mean to say it. Never mind.
and that is it for your closing bell cut. We'll finish it right there. We'll see you next week. Coach Boyer, Salt and Pepper, Jason Jacoby. See you next time.
God bless. Bye now.